I want to welcome some of my panelists here. We've got Paul Reichert from Prospera, Paul Green from the Big Sky Economic Development. I feel like I'm missing a word.
That's what it is now. I continue to say Economic Development Authority, and that's wrong.
Okay, all right, I've stopped soon enough. Liz Marchi from Two Bear Capital, and Brent Donnelly from the Small Business Administration. Unfortunately, Scott Holton had a accident last night, and he's not able to join us. We wish him a speedy recovery. We're going to start off here with an audience poll, but before I do that, I just want to give you an idea kind of where we're hoping to go. We have a lot of information. Maybe we'll get to it all, maybe we won't. Here's a rough outline. We're going to try to talk about types and sources of capital, then move into some fundraising strategy and processes, talk a little bit about investor expectations and evaluations, what kind of founder support options there are, and then if we have time left, we'll get into some common mistakes and or your questions. So with that, we're just going to do a quick show of hands so you can we can kind of help guide our remarks to the audience and what they're interested in. So just show of hands, how many of you have an idea, maybe you've even gone so far as like forming your business entity, but you're not operational? Okay. How many of you are up and running, say 1 to 3 years? Okay. How about 5+ years? Okay. And I skipped over the middle range there, 3 to 5 years. Anybody? Okay. And how many of you have sought capital already? Okay. And if you don't mind sharing, what processes did you use? You can just shout it out.
Accelerators, incubators, venture capital.
Okay. Anybody else?
Partnership with somebody who's already in the industry I was serving.
Okay. Okay. So with that in mind, let's just jump right in. Maybe Liz can kick us off with one source of capital, which is equity investment. I think it's already on.
Is it on? Good. Well, thank you. Thank you very much for having me here. My most important advice about raising private capital is don't do it unless you absolutely have to. It's hard. It is, and it's getting more difficult, especially at the seed and early stage level. And I've got a perspective both as an angel investor. I started Frontier Angels in 2006, and we've done about 40 angel investments across the Pacific Northwest, and now at Two Bear Capital, which is the exact opposite end, totally top tier, very deep tech, offices on both coasts, lots of PhDs. Mike Gogan, 20 years at Sequoia Capital, top tier record. So it's always hard to raise capital, but do your homework before you approach any investor or any firm. Our firm, everybody's got a website, everybody's got a LinkedIn page. We have, and actually, unless you're one of the top 3 biggest firms in the world, you're probably pretty focused on a particular vertical. Our firm at Two Bear Capital, we invest at the intersection of electrical engineering and biology. And in the biology side, we're interested in neurology, oncology, and immunology and how they work together and nothing else. We don't do diagnostics. We don't do lots of other things. And then we invest in cybersecurity, oddly, because as we got into AI and ethical data sharing, we realized that the security issues are really incredible. And we had a lot of deep stack of experience, Mike in particular, in that. But private equity is for companies that want to scale, go big, and exit. That's, you know, and as an angel investor, the biggest challenge we have now, I still have 15 companies that we call the living dead because they are operating, they employ people, the owners are happy, and they have no interest in giving us their money back, our money back. So, and eventually, if you don't get your money back, you don't get to invest again. So just think very deeply about, and I, you know, things change over time. They do, we all know that, but if you don't want to grow and exit a business, private equity or even angel capital is not the right thing for you.
Okay, thanks. Let's talk next about some government options. So I'll just kind of give a little preview here. Let's start with Brent. He can talk a little bit about maybe some lending options, and then Paul Green, if you could talk a little bit about government tax credit options.
Sure, okay, thank you. Go Cats, start with that.
Go Cats.
Okay, good, we're in sync on that, so. You want to,
What?
So
I got
Brent Donnelly.
I got sent to a women's college because I was so wild in high
Okay.
school.
Oh, good. So, so thank you. Yeah, it was interesting. Thanks for asking folks where they attempted to raise capital. Nobody said banks or other types of lenders. And so I guess I would talk for a minute on government guaranteed lending. With the SBA, Small Business Administration, we're one of the primary guarantors of small business loans that banks make. There's also other government guarantees out there, like through the USDA and others. But the space that we're in this whole business of raising capital or access to capital, if you want to call that, is in helping the businesses that are not, basically not qualified or not quite qualified for conventional bank financing. And so if you go to your bank and they tell you, no, we're not interested, or you don't quite meet our criteria or something like that, one option for the bank would be for them to layer on a government guarantee onto that loan. So the bank still makes the loan to you, but the government guarantee gets layered on there, and it helps mitigate the risk for the bank. And you're like, oh, that's great. The bank's got their risk mitigated, so what's in it for me? Well, a couple things are in it for you, potentially. A lot of times these are used because a business doesn't have the amount of capital injection into a project that the bank normally would want, which might be like 20, 30% or more. So with the SBA loans, you can get in with as little as 10% capital injection. Sometimes on younger startup businesses, there's not sufficient capital, or at least not sufficient capital in accordance with how the bank views their lending criteria. They can mitigate that risk with an SBA guarantee. So it helps some businesses that fall into that bucket where your bank, is in sync, or they're in line with your business idea, and they're like, yeah, we can do this, but we can't quite do it. Doesn't meet our lending criteria. They might be able to bring us in, and you could get that financing that you need. It could also maybe stretch out the term of the loan, which will help with cash flow, or lock in competitive interest rates and things like that. So raising the capital with a government guarantee here in Montana, I assume everybody here is from Montana. We have lender agreements with all of the banks in Montana. So whoever you bank with, whatever part of the state you're in, they do have that tool in their toolbox.
Cool, thanks. Paul Green.
Okay, I'm very happy that I got the tax credit, because I'm going to see how creatively I can spend this.
Okay.
Tax credits are something that we utilize. It's not something that I'm an expert in, but there's been some pretty exciting changes. Lots of people understand and know about the new market tax credits. We have a very large partner here in the state, MoFi, that handles the majority of them. They receive about $75 million in tax credits every year, which is a significant impact in a state this size. And so as you're developing your project, those are more utilized for the larger scale projects, not for like a startup unit that's looking at just getting their bootstraps started. What I think is more exciting, and what I've most recently found out, is that the R&D tax credits are a tax credit that's not being utilized right now. So as you're spinning up your business and you do research and development, there is a company here in the state called ADP that actually does a lot of that work. They've got a couple of different offices, one's out of Butte and one's out of Missoula. And what they do is they help you, and these tax credits can be used to offset income tax or capital gains taxes. It's a one-to-one match. It's a very exciting opportunity, but for some reason, even though it's been in existence since 2018, not many people have used it. I think that people look at these tax credits as something that they need to be doing something large scale, like the low-income housing tax credits, as well as the new market tax credits. So if you're a company that's got some profits, hopefully you're starting to generate some profits. I'd sure like to see that happen. It's very exciting what you're doing, by the way, and you did a great job speaking. You should be proud of yourself. Mm-hmm. But take a look at the R&D tax credits, because it is something that should be able to, the one thing, when I got into economic development many years ago, my favorite line was somebody would walk in and they'd say, "I want a grant to start my business." And I said, "So would I." So this may not be a grant to get your business started, but if you do become profitable, it is a way to offset some of the impacts.
Great. And Mr. Reichert, maybe you can round us out here with some options about local community economic development type work.
Sure. Is this on? I'll switch. Thanks, Paul.
You're welcome, Paul.
So Prospera is celebrating our 40th anniversary this year. We're a local business and community development organization based here in Bozeman, serving Southwest Montana. Prospera has local revolving loan funds. The sources of those funds come from different places, but we're able to lend to businesses that are primarily located here in Gallatin and Park County. We can lend to businesses outside of that area, but we do it infrequently. And I describe using our money as it's very traditional term lending for a business, so there's no equity. It's simply you get a business loan to grow, start, buy, sell, expand, leasehold improvements, whatever your business needs. Our funding can provide for that. We often lend money with banks, with a private investor, with an owner that's selling. So the use of revolving loan funds is very flexible. Similar to what has already been mentioned, we can lend oftentimes where I'll say a traditional financial institution simply can't do it. They have standards or limits on what they're able to do, and that's where our Prospera funds can come in and lend money. A traditional loan for us, or I'd say a sort of typical loan for us, maybe a better way to put it, we're lending $100,000 to $400,000. So if businesses are looking for millions, we're probably not the source for that, but we have been part of deals that are large. So sometimes we're able to lend in ways that just other institutions can't. Couple advantages, low capital up front to get the loan. We can take second positions on collateral. There's a lot of flexibility we have with how we use our loan funds. Our interest rates are a little higher than, say, a bank, but we're making a deal that otherwise might be told no to yes. That's the big advantage of using Prospera. And our decisions are local and our money stays local.
Great. Thanks. I'm now going to start leveraging the breadth of experience on this panel. We're going to move into talking a little bit about fundraising strategy, and my first point here went to Scott, so whoever wants to dive on this and answer it, because I think it's an important one for us to address, which is, kind of when and how much to raise and what type of rounds of fundraising would be important considerations for folks in the room. Anybody want to take that? When and how much money to raise?
Well, first of all, know that certain types of capital are more appropriate for certain things than others. I was started in finance in 1978 when prime rate was 19.5%. And I used to go out every Friday with a loan officer and look at collateral. And I'm going, you feel good about this. This company's got a prime +3 line of credit. They owe us $400 million, and you feel good about this. But banks like cash flow and collateral. So if you want a loan, you need cash flow or collateral, or you need somebody nice like the government to back you up. If you want to raise for a venture, make sure that you are that you have a compelling product, a compelling market size. You have a team. It's always better if you've done it before. Even though we're very early stage investors, we rarely invest in a first-time founder, mainly because we like founders who failed. Because if you're really going after swinging for the fences, you're going to fail. That's where you learn your greatest lessons. So, and when you do your deck, it's always good to do a deck, whether you're going to raise or not, just so that your team and you are certainly aligned with your market, your go-to-market strategy, your product market fit, your sources and uses of capital. I mean, all of those things really matter. And just speaking from both as an angel and from a VC perspective, 12 slides, 30 font, 12 to 15 minutes, you can have 100 appendix slides, but don't spend the whole time talking about your product, especially a highly technical product, because the investment team may know that, but at first cut, everybody didn't want to hear that. There are very few technical investors, let's put it that way.
Interesting. Brent, I wonder if you can shine a little bit of light on what sort of expectations more institutional capital or either one of the Pauls might be expecting.
Sure. I mean, I think that, and I think Paul said it too, like more traditional is what you're asking about. And I think, so I brought up banks, and, I might make the statement, well, we have lots of banks and they lend money, and some people in the room might laugh about that because they say, oh no, they only lend you money when you don't need money or something like that. And so I guess what I would say with that is, what I think the bank is going to want to know is simply one question: how are you going to pay me back? Right? How are you going to pay me back? And you're going to have to convince me of that. And so when you approach a bank and approach a lender, and all of you guys chime in on this, and I think it's what you just said, Liz, you be prepared, right? Don't walk in with, I have the next greatest cheeseburger. I can make this. I made it in my backyard. Everybody loves it, and it's a sure deal. I just need $1 million to get my thing started up. It's like the bank is going to just kick you right out the door. I mean, it's not going to work. So you want to know your product. You want to know your financials. You want to know why and how and what it looks like. You want to be able to answer those questions. And in a little bit, I know I'm going to get asked a question about some of the other SBA resources, and we have some really cool things, but one of them is, how do you help with creating a business plan and projected financial statements and all this? And it's great to go out and seek maybe assistance with that, but if you're the one applying for the loan at the bank or at one of these economic development organizations, you need to know your business plan. It's not somebody that helped you with your business plan. You need to know your financial statements. You need to know your market. You need to know your costs. You need to know your profit margins, and you need to know all of those things, because that's going to really give you an advantage. It's going to give you a leg up. Sorry, I apologize for that. Something comes out of your mouth and you're like, oh, geez, I can't. But that's gonna help a lot, especially if you're a startup business, if it's something new. Those are inherently viewed as more risky operations, and it goes back to what she just said. Liz just said we really work with a first-time founder, right? Because you want to see the failure. Well, bank, in a lot of ways, maybe is no different. Yet you might be a first-time business owner, and that's okay. But they're going to want to be convinced, beyond a shadow of a doubt, how you're going to pay them back every month or quarter or semi-annually or whatever that payment arrangement is with them.
And if you can't answer all those questions, just ask ChatGPT, because it will tell you all of that.
Okay, before my next person starts in, Mike 3 is down. Michael Sweeney, thanks.
If I could just kind of jump off of what Brent just talked about. First of all, where'd James go? James spoke about the community bank and how Senator Daines had used the community bank to get started. Full disclosure, our family owns a community bank, Little Horn State Bank. And the one thing that I want people to know about banks is they're not any different than any other organization. They have areas that they're experts in too. So you may go to a bank and you may have this idea and this concept, oh, there he is. But the idea doesn't fit the bank. It doesn't. We've been one of the fastest growing bank systems in the state for the past several years now, because more banks are getting out of agriculture because they don't understand it. That's easy to understand because you got a lot of these farmers and ranchers that they're doing $1 million operating line out of a checkbook with receipts that are in a shoebox. I'm comfortable with that. It's a standard thing, but a lot of people get very nervous about it. So when you're looking at traditional lending, you need to be looking for banks and traditional financial institutions that actually have the expertise. Because I tell you what, there's nothing like going into your lender and saying, I would like to do this, and they tell you no. It means they're trying to protect you. It means that there's something, don't look at it as a negative, look at it as a learning opportunity, because they're trying to protect you. The best thing for them to get their money back is for you to be successful. They're not trying to stop you, they're trying to help you. Incorporate that with some of the EDOs and their gap financing. Look at those stacks and how you can collaborate. Usually they have somebody else that they can send you to, but that would be, when it comes to the traditional funding, I would encourage people to look at the financial institutions and who's actually, what are they lending?
Yeah. Paul Reichert, I wonder if you can talk a little bit about some of the risk and flexibility considerations when you're thinking about which source to go with. I know that Prospera has some options around flexibility that maybe some other banks don't. You kind of touched on those earlier, but.
Well, okay, this work. Thank you for getting this up and running. It was mentioned earlier, I think cash flow and collateral is pretty important to us. We want to know how we're going to get repaid. And understanding your financials, or building that with someone who really understands it and the assumptions around it, especially if it's a new, I'll call it a startup or relatively new, making sure that that's really clearly understood, because even though that we can take more risk, we still want to get repaid. So that's an important consideration. Flexibility for us can be around the kind of collateral. And I think Paul just hit on it. Not every bank is the same. Some of them specialize in certain kind of industry sectors or segments. And we're willing to take a lot more risk typically, but with some sense of like how we're going to get repaid. So I would say the variation can be on the cash injection for the loan. We're usually having an owner preserve working capital, so that's a smaller amount. Collateral, oh my gosh, I could tell all kinds of stories about how many used cars we've taken as collateral for some lending, or just a business that had a lot of vehicles. Stuff that's not, I would say, a traditional lender would not consider great collateral. Inventory, not great collateral. We've done stuff that I would just say a traditional lender's not going to be excited about. So that's where some of the flexibility comes in. Also sort of the terms of the loan. We are just trying to be really business friendly. So I would just say we're able to do some things because of how we operate and that we're relatively small, that a bank might not be willing to do.
We've had a little bit of discussion around, and I've heard some of you talk about this, about the stack. Liz mentioned the deck, which has specifically to do with the presentation, but wonder if, just for any of you, if you can talk a little bit about ways to leverage different sources on top of each other, like building a capital stack of like, I'm going to use this type of loan for this, and I'm going to leverage that into being able to access a different source of capital.
That's very big for us, particularly with non-dilutive capital from the NIH. I mean, almost all of our companies have very significant non-dilutive capital through research grants from National Science Foundation, NIH, or they did. No, they do. It's all in flux. But that's very important for us. Very rarely in our venture world do we see companies, or do we invest in companies that take on any kind of debt. Debt's a drag for growth, and we like to see companies doubling revenues every year, and it's just hard, yeah. But it is interesting to watch what's going on in the private credit market, because I think that's going to become a huge player over the next 3 to 5 years, yeah.
Anybody want to add to that?
I might just add a couple of things to what Paul Green said a minute ago about the shoebox. Before I had this government job and everything, I did some commercial lending in the ag real estate world through the Farm Mac program, took loan applications and prepared them and everything. And I remember one applicant walked into my office with 2 suitcases, big ones, 2 big suitcases. And he had every paper and every receipt and every record. He didn't use a computer. It was all handwritten for 10 years. And that's what he showed up to apply for a loan. And it was really interesting. But you know what it was? He knew everything about everything, and it was a very successful and easy loan application. And it was great. So, and the other thing, just off what he said, is banks do have like their areas of expertise or their areas of interest, and sometimes they have areas where they have too much concentration in a particular industry or a particular type of business. And so they might have expertise in your business type, but if they already have too much concentration in their portfolio, it might be difficult, if not impossible, for them to make another loan in that industry until they've got that balanced a little bit more. And so, you know, it's like, yeah, start with the bank that you have a relationship with, but if you're told no for some reason, there's nothing wrong with asking another bank, because they may very well have the opening and the opportunity and the funding that you need.
Okay.
I think that one thing that the past 18 months has taught me, going from commerce to here, has been that access to capital has been very difficult. And that's why one of the first things that we did at Commerce, I'm glad Olivia is here because she was a part of this, is we recognized that Helena is about the worst place you can find to actually sit at the seat and know what's best for the entire state. So what we did was we sent out a revolving loan fund capital injection of approximately $500,000 to every EDO so that they could actually, on the ground, know what they need. So if you're in an area and you have a local EDO, which I think that several of you are probably in Paul's area, it helps to have somebody that understands and knows what you're doing. The federal programs are great, the state programs are great, but really this state is a state that's built on relationships, whether it's a commercial project or an agriculture project. You know, you can walk down and talk to Paul, and Paul knows he's got a pot of money coming, and he thinks, I know that this guy is going to work day and night, and I know that this other guy, he goes out and spends every dime he gets to. Those are all important things. So as far as your capital stack, your reputation should be part of your capital stack, because that's what's going to sell you more than anything else.
Yeah. On that note, I just want to go off script for 1 second and point out our friends from Commerce in the back of the room, if you just raise your hands. In addition to the Secretary of State's office, our office, Commerce, we all work a lot in this area, and we try to do a good job of knowing when, if you've called my office, what you actually need is Commerce, or if you've called Commerce, what you actually need is me or the Secretary of State. So I would encourage you, if you're in one of those question zones, reach out to any of those state agencies. We'd be happy to help you, and we appreciate them being here today. Make sure you touch base with them if you think you might be potentially, and the question might potentially go to them. And if you come talk to me and you tell me that, I will send you right over there. So, yeah, please do.
I thought I'd point out too that at Prospera, we offer no-cost business counseling and advising. Any business in the area can come and meet with us more than once to work through any questions you have around your finances or plans or strategies, and it's free and confidential.
Yeah, that's a good segue into one of our other points. Brett, if you want to jump in here on like some of the founder support options that SBA has.
Yeah, sure. So in addition to these access to capital programs that we've talked about and guaranteed lending and different things, the SBA also provides funding for something that's really cool. And Paul just talked about it for a minute, but we provide funding for resource partners. Some of the funding goes through the state and then out to local organizations like Prospera and Big Sky and others. Some of it goes through other organizations and universities and that. And so we call them resource partners, but they're counseling just like what Paul just described. And across Montana, there's a network geographically dispersed of 10 small business development centers. There's 2 women's business center, and there's a veteran business outreach center, which is located over in Billings under the Big Sky roof over there. And these organizations, I mean, these are folks that there's no cost. You can go in, talk to them about your business plan. If you're a startup business, you can talk to them about what's the next step. You can talk to them about how do I file with the Secretary of State or different things like that, or what should my organization be, or is this project even feasible, and how do I go about figuring out whether I think it's feasible or not. Or you might be an existing business and you want to take the next step and grow, and you're going, okay, what is the next step? What things am I thinking about? What things haven't I thought about? And work through those kinds of what we would call counseling or business advising type services. They're available at no cost, and I would encourage anybody at any stage of business to reach out to your local organization if you have any desire at all to grow, because you might have everything figured out, and that's great, and you might have your advisors, and I would hope that you would, that have provided good advice, but it's like every time you're able to talk through and articulate what your business is, what your challenges are, what your next steps are going to be, it gives an opportunity to bounce that off of somebody else, right? We just heard it. I mean, we just heard this today, right? Brianna's been talking about her business. Liz had a connection with something that you had funded and had a very specific question, you know, and I don't know if that's something that you had thought about or not, or whatever, but it's definitely, you know, that kind of a dynamic can help you. And so sometimes it's like helping you get to a yes, right? Helping you get over the next hump. And sometimes somebody might point something out to you that you might not want to hear, but it might be really good information because it might save your butt, right? If you hadn't thought of a big pitfall. So resource partners are available. Of course, women's business centers are focused on women entrepreneurs. The veteran business outreach centers for veteran entrepreneurs, which we have a huge population of those here in the state, which is really cool. And then the small business development center is, of course, open to everybody. So. Thank
Great.
you.
Yeah,
Yep.
thanks, Brent. Liz, one of the points you offered me was sort of the importance of getting your team, your leadership, your founder fit, right? And I wonder if you just want to touch on that.
Oh, your team?
Yeah.
You will never scale anything without a team, ever. And I have to say, I think that's one of the hardest issues. I mean, every partner meeting on Monday when we end, Mike goes, the only problems we have are people problems. I mean, you think through all of the financials, the technology, you know, you're curing cancer, your business is doubling, but people are really important. And getting that right, getting a team that's very aligned with what it is you're trying to do, and then, you know, making sure that everybody is on the same page, that and culture begins from day one. And that's also the other big part of having a successful team are your values aligned? Is the way we're going to operate aligned? Do we know where we're going? Are we going big? You know, and it is just this whole work-life balance thing with a startup is a myth. Nobody has any work-life balance when they're doing a startup. Don't let anybody tell you that, because they're just not. You need to grow your business, sell it, and take a vacation. So, yeah.
Excellent advice.
Yeah.
In our last few minutes before we turn to open this up to some questions from you all, I just wonder if we could talk a bit about, you know, maybe some of the, you know, founders' mistakes you've seen, whether they were operational, market timing, anything like that. I'll just throw that out to all of you. A few cautionary notes before we open up questions.
I would say we just recently had a business that we were working with, and they had so many ideas that came from one concept, and it was trying to bring them to focus in on the most profitable one of those. No, we can't do that. We gotta work on this. Everybody keeps telling me that. I'm like, okay, we're probably done with this conversation, because it's not willing to You know, I ran a NASA business incubator about 25 years ago, and, you know, the one thing that I learned is that the founder may be really good at their product, but they don't have a background in accounting and marketing and engineering and the legal system and the financial system. Each one of those is a pitfall that is a reason for your company to fail. And if you're not willing to take that advice, then you're probably not marketable, and you're probably not going to get the capital that you need to get off the ground.
Anybody else want to offer? Go ahead, Brent.
So I'll just tell a quick story to maybe illustrate that a little bit. I think what Paul kind of just said, but I worked with a company a few years ago over in Idaho, and this is a smaller business, but they were like about a $2 million company, and they were profitable and making money for a long period of time. I don't remember, 10, 15 years, very long period of time. And they said, well, we want to grow. We want to become about a $10 million company. We can get some contracts, and we have these contacts and different things that they needed to borrow money. And so we did a government guaranteed loan. I was through the USDA at that time on that project. They did grow their company to that $10 million. And then, but here's the thing, they were losing money because they didn't have the team in place, and they didn't have the plan in place, and they weren't able to scale it. And so, that's the bummer part of the story. The really cool part of the story is the relationship that they had with their bank, and then ultimately with us at the USDA at the time. And we all got together. They didn't run off run off. They came back, and we were able to help them sell off some assets and get their loans paid down and downsized, and they shrunk back down to where they were, and that was okay for them, right? You're looking for companies that are going to grow and get big and everything, but it was okay for them. It was okay for their employees. It was okay for their community, and it made a big difference in a rural community versus that company going away.
Yeah, thanks for that. Let's go ahead and open it up for questions, and oh, good, great.
Thank you. Catherine Harrison, serial entrepreneur working on something new. I've been following this national trend of state-led efforts to drive early-stage startups, aggressively investing through capital pools, regulatory flexibility, incentives. My last company got investment from the Next Level Fund in Indiana. I was at New York Tech Week last week, and Wyoming was very aggressively telling their story about pro headquarters, particularly for digital assets companies. So my question is probably a bit more for Kirsten and some of the others, but I'm interested in terms of like what strategic initiatives, regulatory changes, partnerships, the commission, Commerce, the governor's office is thinking about in order to not just attract early stage startups, but also to bring in early stage capital, expand angel networks, venture capital, other types of programs that can really start to accelerate the ecosystem.
Yeah, I appreciate the question. I would turn it right back around to you and say, everything you just said sounds super interesting, and I would love to know what other states are doing. Our charge is to support capital formation in the state. It is perhaps underdeveloped. It's something that our office is definitely working on. This summit is part of that. The legal infrastructure that you're talking about I'm perhaps not the best person to answer that question. But it is something that our office is interested in. I think, as the commissioner mentioned in his opening remarks, digital assets, for example, is something that our office is really trying to lead on and talk about what does the infrastructure look like in a way that promotes that space, that enables it to function in a way that serves Montana interests, that serves the potential for capital that exists in that digital asset space, and what is a way that we can be useful that still protects investors, counteracts fraud, but also promotes growth. So
Can I speak to that?
yes. Oh, good. Liz
Since I
wants to
spent-
jump in. Yay.
I spent a lot of years getting a fund-to-funds bill passed in Montana, but it never got signed because my two advocates decided to run against each other in a political race. So but I learned a lot through that process. And the main thing is that we still live in a state that has counties and municipalities without running water. And the minute you start talking about private capital or tax credits for rich people, it's a non-starter. The one thing that I would like to see Montana do a lot more with is the SSTI money. Lots of states have, the state small tax credit, what is this? SSTI?
You're getting close.
Yeah, lots of states have used that as a source match of capital so that existing funds, what it does is incent angel groups, angel funds, and small private equity funds. It matches their new raises so that the state isn't making an investment decision. Private investors are who have skin in the game. It's been a very effective early stage capital program. And I can tell you, when we have our first exit, I'm going right back to the angel world because it is so critical for what we need in this state in terms of innovation and new ideas. And there's just no other sources of capital of that. I mean, it's very risky, but we have a lot of high net worth people here. In fact, we just partnered with both now Scaling Montana and Frontier Angels last week at Two Bear and had a first kind of Shark Tank pitch event. We're going to do one in Billings. It's today, sadly. It is conflicting here. But yeah, it's a really tough sell in Montana at the legislature.
And there is, first of all, I want to acknowledge the fact that everybody is nice and lightly dressed today. I like the color. I don't always get to see this. But your question, you're a serial entrepreneur. You're exactly what the Magnet Entrepreneur Program was established for. Do you know about it?
Nope, never heard of it.
Okay, so the Magnet Entrepreneur Program was designed so that if you sell your stock or you sell your business, that you pay no capital gains in the state of Montana. So those capital gains dollars go back into your pocket so that you can start a new business. That is something unique. It was one of the governor's initiative. If you got a question, maybe Frederick, can you help her out with that? So Frederick Vandenabel back there, part of the business attraction team for the state.
But that doesn't help you on the front end.
No, it doesn't, but she was asking, that does mean something when you're investing in it, that if you sell your stock and that's with anything. What I like to think about is we see this world of high tech being developed here. It reminds me of the Silicon Valley in the early 80s, and as serial entrepreneurs were rolling in and being bought up, and then they'd take their money and they'd start another company. This just puts more money back in your pocket so that can happen.
Great. Yeah, thanks.
I had a question, Frederick from Commerce. So I was doing a Google search of ways to raise money in small business, and crowdfunding came up. And then they gave an example of Pebble Time. Remember Pebble watches? I don't know if anyone, so I had a Pebble watch. I'm like, oh yeah, I remember that brand. And then it said that Kickstarter, they were only crowdfunding, their goal was 500,000. They raised 20 million back in 2015 on Kickstarter, this crowdfunding. And I'm like, I don't have any experience with crowdfunding, but I'd love if anyone has any experience. Has that ever come up in conversation? Does anyone have any anecdotes or any commentary on crowdfunding these days?
Don't do it.
So I did crowdfund, and it was great because I got to see that in a market that didn't exist, we could build something, and it was more international versus a global, or it was a global need versus just a national need. So
There's very specific businesses that crowdfunding is great for. Apparently, when you have a huge community of fans that love what you're doing, then crowdfunding makes a lot of sense because it's a huge marketing push to it.
I will tell you, it's one of the lesser utilized offering options that are registered with our office. Part of that on the state level anyway is that if you're going to do a state-only crowdfund, there's a cap on the amount you can raise. You might hit the federal crowdfunding options, and we have one of our friends here from the SEC Small Business Advocate. You'll hear from her too. She might be able to touch more on what they're seeing at the federal level. I don't know for sure. I just know it's not something we see a lot of come through the commissioner's office.
And it's a regulatory nightmare. If your business actually succeeds, it is just a nightmare in terms of your accounting and K-1s.
Good afternoon. I have a question on using banks for development capital. My background had raising capital back in the late 1999s, and anybody that lived through that, God bless you. But it was crazy, and I had a guy that went to a big venture capital firm in Palo Alto and got $75 million for internet laundry. So that was the environment. We were able to raise $20 million in 6 weeks. It's not that way anymore. So my question is about the use of banks and government entities for lending capital. I was working with some of the folks at Commerce, and their business attraction specialist said, well, you guys are solid, go to a bank. I never had that sort of banking relationship. So my question is, and this is more to Mr. Rick, I'm sorry, I'm blanking on you for pronouncing your last name. But we have, basically, we're going to be scaling a very large business, and it's going to change that business transformationally. And we're looking for venture capital, not venture capital, development capital in the $15 to $20 million range. And that's pretty high, but it's a big project. And just asking if members of the panel, Paul accepted, could give me some perspective on that. Because my sense of everything, everybody I've talked to, all the grants and whatnot, the numbers are a lot smaller.
I guess I'm not, I guess on the, as far as the SBA in using a government guaranteed SBA loan, $5 million is basically the cap on that. There have been conversations about raising that, but it's not happened at this point. So 5 million, if that's what your question is.
And I'm not sure what you mean by development capital. I mean, our check size is about 5 to 30 million for a seed round.
Development capital for big capital projects, the formula is normally around 5%.
But is it CapEx, or are you building a technology, or that's what I'm not understanding.
It's a large engineering project.
Oh, okay. Yeah.
And it will involve construction of a couple of plants, digesters, rail infrastructure. It's big. Development capital, probably more traditionally you would think of as seed capital, but if you got a big project, your seed capital amount is big. And I have investigated with DOE. They have a lot of money available, and they've got some pretty clever ways of helping us, but this is sort of a new venture for me, raising the capital raise side. I have 2 partners, and I missed a meeting, so I got stuck with capital. So, anyhow, I don't want to take up any more time, but I'll talk to you privately about it.
I just say real quickly, there may be other, at the federal level, I'm generally where there's other agencies that do guaranteed lending and different things, then they may well have higher limits or higher dollar amounts that they can entertain, but at the SBA, we're $5 million.
Well, DOE is pretty flush. They gave Montana Renewables a $1.4 billion expansion loan at very good rates. Anyhow, I'll talk to you later.
Yeah, we've got time for one more.
Hey, it's a quick one. I'm Dale Mandeville, Wheelhouse Software here in Bozeman. You mentioned, Paul Green, you mentioned the R&D tax credit. And we've looked at doing that a couple of times, but then looked at the downside risk of the tracking side of that and the risk that we'd be audited and then they'd find that what we were doing maybe didn't qualify as R&D because we've got a pretty good mix of customer projects that then maybe flow into the software. I'm just curious if you've seen or had any experience with businesses getting audited or what the downside of the R&D tax credit is.
No. No.
Short question, short answer.
I've actually been on this job for 8 weeks now. I was formerly the director of commerce, and so my hands are just now getting into this. It seems very interesting. The company that kind of seems to track these things seems very confident in it. I'm used to new market tax credit, so I don't have the experience.
From someone who has a tax liability to the project. And what I was going to ask this about the R&D tax credit. It doesn't sound like it's for a business that's already generating revenue, or can an out-of-state tax liability, investor, company, et cetera, come in, invest, harvest the tax credit for a local R&D project?
You have to be making money to
somewhere
have a credit.
Understand.
And that's kind of one of the tough things here is like, well, we need to do R&D to get our product to market.
Well, but new market tax credits is someone else who has a profit to develop a new project in a certain area. The investment tax credit, the production tax credit for solar and wind were the same model. So I'm just wondering, is the R&D tax credit structured that way or no? Okay, so that's, I think, similar to the the exit. If my capital gains tax, that's great, but does not help me on the front side of starting R&D within the states of Montana. So that would be, to the senators, a change in the R&D tax credit for small business, regional development, et cetera, where out-of-state companies or in-state companies who have large margins and large tax liability can help invest into other research and development, similar to the ITC new market tax credit would be a good piece of policy. So.
Well, I want to thank our panelists for all of their insight this afternoon. Many of them will be sticking around. As you've just seen, this is sort of the conversation that this panel hopes to generate, and the summit in general, right? So reach out to us, not when we're not on the stage. We want to continue these conversations, and we hope you'll talk amongst each other. There are great ideas in this room, and we appreciate your time, and especially to our panelists. Thank you so much.